Whether you're buying a new car or a home or applying for a credit card, your credit score can be a deal breaker. So how can you check your score and make improvements if it's not great? Peter Cishecki, President and CEO of Everything Financial, is here with some advice for us this morning. Good morning, Peter.
Good morning. How are you?
Great. Do a lot of people know what their credit score is? It's like a big mysterious number that people have no idea.
Exactly. It's this number somewhere out there in the clouds they don't have a clue of, but they can go online, talk to a few different companies, and find out what that score is. And then there is ways to improve it.
Okay, so let's talk a little bit about how we find that credit score.
You can go to Equifax or TransUnion. Just go to Equifax.com or .ca in Canada, TransUnion. Go to those companies and apply.
Is it free to get?
It is free, and you can find out what your score is. A score below 620, that's kind of the magic lowball number, makes it harder to get credit, or it can make it where you have to pay higher interest rates if you can get credit. Above 660 is getting into the good area of a good score.
So how do people get a low credit score? What happens when they see this number? What's been going on?
Yeah, not paying minimum payments on time is one thing. That's important to try and make sure you pay, even though you're not paying a full bill off, pay at least the minimum payment. Try and keep your credit about 80% of what the limit is. So if your card gives you a $10,000 maximum, try not to run that card up beyond $8,000. The other thing is, though, applying for lots of different credit, going to 3 different places to try and get a loan. Everyone then is pulling your credit, as they say, and that will cause your score to go down because it looks like you're trying to get a whole bunch of different loans from a bunch of different sources. So limit your applications.
So we talked a little bit during the commercial break about a credit rating and a credit score. Is there a difference between those things?
Credit ratings are kind of what's been for bond ratings, and companies get a credit rating, an individual gets a credit score.
Okay.
So there's a difference between the two, but people think they're the same thing.
Okay, so how do we improve the credit score if we want to get above that? Was it 660 you said?
Above 660. Pay your bills on time, at least the minimum payment. Try not to rack up any bill beyond that 80% of whatever the limit is, whether it's a line of credit or a credit card or whatever the case may be.
Okay.
And don't go around continually applying for more credit. You keep applying for more credit, that score is going to go down.
Is getting rid of some of those credit cards that you maybe don't use very much, getting rid of those, calling them, canceling them, will that help your credit score?
It doesn't. It won't hurt. It's not that it'll help right away, but it does show that you have less credit, because if you have a bunch of cards available that you're not using, but you have all these limits of 5 and 7,000 and so on, that will affect your credit. So getting rid of them is not a bad idea if you're not using them. And there might be fees that you're paying on them and you're not even using the card.
That's money you don't want to have to.
Exactly, wasted money.
Wasted money. Okay, so how long does it take if we have a bad credit score to pay those bills and to get it back up above 60?
You can start to see numbers go up within 3 months. Kind of every 3 months it kind of refreshes itself. So try and stay offline applying for new credit, and in 3 months from now you might see a better score. But just don't try and pull that credit until you absolutely need to. Don't do an application until you're really ready to make a move on something, or else, again, you can have a negative effect on your score.
And it's important to have that good credit score because this can affect all sorts of areas, applying for a house, buying a car, everything.
Absolutely, because you can go apply, you don't have a good score, you're going to pay a higher rate of interest. And a higher rate of interest, even a quarter point or a half a point on a mortgage,
that could be a deal breaker.
Over 25 years, think how much that can cost you. We're talking thousands upon thousands of dollars.
More wasted money.
More wasted money. We don't want to waste money.
No, we don't. Peter, great advice this morning.
Thank you.
Thank you very much.